Hi, everyone, and welcome to the week ahead. I'm Tony Nash, and today we're joined by Dale Pinkert, Tony Greer, and Albert Marko. Guys, thanks so much for taking the time on this Friday. It really means a lot. Today we have a number of key themes. We're going to talk to Dale about TLT. We're going to talk to Tony Greer about tradable bottoms. And we're going to talk to Albert Marko about the government shutdown. So before we get started, I want to let you know about a new free tier we have within CI Markets, our global market forecasting platform. We want to share the power of CI Markets with everyone. So we've made a few things free. First, economics. We share all of our global economics forecasts for the top 50 economies. We also share our major currency forecasts, as well as Nikkei 100 stocks, so you can get a look at what do our stock forecasts look like. There is no credit card required. You can just sign up on our website and get started right away. So check it out. CA Markets free. Look at the link below and get started ASAP. Thank you. So Dale, really glad to have you here today. Thank you so much for taking the time. It's your first time, and we're really glad that you've made the time for us.
Great to be here, Tony.
Thank you very much. So we've seen the SPX approach 4,200 and bond yields spike and continue to rise, and TLT continues to fall, of course, as yields spike. So we're seeing TLT hit levels we haven't seen since 2006, 2007. It seems to be one of those times where people are saying we're at levels we haven't seen since X, right? In a lot of ways. So how far do you see this going? Is this an opportunity? Is there too much uncertainty? Where do you see that that debt and equity kind of environment?
Well, on other broadcasts, and people have been following me know that I've been looking for the October low in TLT to be taken out. On the weekly chart, it was a confirmed low. Markets rarely bottom when momentum is confirming price, and all we did was move sideways. Took care of that low a few days ago. We're not confirming this time. I wouldn't be pressing the short side of bonds anymore. I think that yields are in a peaking process, and it's most likely to be a growth scare that generates lower yields, a lower yen. And even though the Pavlovian response would be to buy equities, I think equities are part of the weakness that would go along with that.
So when you say growth scare, what do you mean by that?
Just, the employment report that we would have gotten next week, I was looking for that to cement it. As Albert said, the Fed's going to be using different stats to judge it, and we won't know that number. I, expect this to last at least a couple of weeks into the eclipse. Don't call me a kook, but I've seen a lot of astronomical things be turning points in the markets over the years, and eclipses are something that people that do planetary stuff, it can be a time of like the ancients believed, of famine, war, not good omens. And plus we had I'll seal the deal, we had that comet with the green tail that hasn't been around since 1623. I don't know what we were trading in 1623, but that's
tulips.
Another.
That's right.
Yeah. So there are a lot of things, messages in the heavens besides our charts. Price action's king, but I pay attention to things like that.
Dale, I don't think you're a kook for mentioning astronomy, because have you ever seen a technical trader? I'm kidding, but so
I was going to say, Dale, you have an astronomy ticker on Bloomberg that I can start watching.
Exactly. So no, seriously,
you could join me in my pyramid and put on a tinfoil hat anytime, Tony.
No, look, I love it. People trade based on different things, right? And none of it's crazy, because we can infer causality or whatever from anything we want. So I want to go down that kind of kook trail for a minute, because I think that's really interesting. From the astronomy perspective, tell us about the eclipse and what that means. And I know this, to people who are watching, this may seem a little bit weird, but I'm actually really interested in this.
Okay, well, this is the first time ever, which is a long time, that people are going to be able to see an annular eclipse with the ring of fire. It's going to be a long time before another one shows up. So yeah, there's another sign. I learned about things like this from others. There's nothing new under the sun. I have to give Chris Carolyn a tip of the hat for tuning me into lunar things and tides and eclipses. And I always had an interest in a vibe from them anyway. And I paid attention to them. I've seen a lot of turning points on eclipses. I've seen them in the dollar. I've seen them in metals. And, I just think that the technical setups are being confirmed by what's happening, the other signals that we're getting that most people are oblivious to.
Okay, that's interesting. So I have a lot of Indian friends. For those of you who know me, or people who watch my feed, my son is Indian. I spend a lot of time in Indian culture, that sort of thing. I've had several Indian traders tell me that they look at star charts as a part of their trading strategies. And again, this may sound kind of kooky to people, but people look at this stuff. And so in terms of a change, like a
Art Crawford, he was another guy that I used to be interviewed with on CNBC and FNN before it became CNBC. He's another planetary guy. I'm sorry I interrupted you.
No, that's great. So what is the turning point that you expect? You're expecting yields to fall a bit, or what is that turning point you're expecting?
Yeah, I'm expecting everyone that was wrong-footed about 6 months ago looking for the pivot are on the other side of the fence now. And I know we can't show our charts now, but the 10-year did what I call as the throwover, where it trades above a return line and then re-entered it yesterday. And I think that yields are peaking, and because of market events, not because of the Fed, but because there's going to be some fear. And I know for a long time, the flight to quality trade hasn't worked. So most people are discouraged from even attempting it. But I think that even if it doesn't work, the bonds will not be as vulnerable as equities may be. And, like we're already seeing it in certain markets. Look at silver. From being up 70 cents to being down 40. That tells me we have a problem with market structure and liquidity for silver to put in the kind of day it put in today. Because I know Tony's been trading a long time, and Albert, and you. When's the last time you saw a range like that in silver without any news?
Tony Greer?
There's nothing you could tell me that happened in silver that would shock me. You know what I mean? It is and has always been a rich man's casino. People make big bets in silver. They underestimate what one person's liquidity does to the market, meaning when one participant decides that they're getting in or getting out, that has a hellacious effect on markets nowadays that are largely electronically driven and front run and all that. So, nothing would shock me in terms of what I would see in silver. I mean, that is an anomaly. It doesn't happen very often, but yeah, silver is a beast of its own.
So since we're talking about silver, can you also talk to me about gold as well? Because a couple of months ago, everyone was on the gold bandwagon. Gold was resurgent. Everyone was moving toward gold. And now it's just, can't get a bid. It's way down, a lot of problems. Miners are seeing it, everything else. Can you, Tony, Dale, Albert, can you guys talk to us a little bit about what's happening in gold?
I've been looking for 1800 for months.
Okay.
Yeah. So, that, and I've been bullish the dollar. That's been part of it. So I think that around 1800 to 1780 is going, and silver 2040-ish is going to be a place where I'm going to be getting long. And you bring up the miners, Tony, that even gold bugs, and I've talked to Tony about this. We talked a week or so ago, that even the gold bugs that were trying to avoid losses in equities by going to the miners lost it in miners. And they're so disgusted. People are so disgusted with the miners that they're throwing up their hands and surrendering. And I think that's a multi-generational low coming in here around 24-ish in GDX. I've promised people I work with I won't talk about the short side of gold and silver once we get down there for a couple years.
Really? Okay. Okay. Albert, what are you thinking about gold?
There's not much more I can add to what Dale said. I agree with Dale. I think 1800. I could even see it going to 1700. Of gold would be an excellent long position. I just for me, I was never a fan of the whole narrative of gold's going to replace the dollar and so on and so forth. So I've always been apprehensive of even touching gold. But I mean, Dale's right. I mean, at 1800 is probably a very good long position at that point.
Yeah, we even saw Chinese gold sell off earlier this week.
Well, everyone needs dollars, Tony, so they're going to sell
Right.
everything under the sun.
Yeah, exactly. Tony Greer, what are you thinking about gold?
Gold chart looks like crap. I'm out of reasons to be bullish. I mean, it just does. There's a triple top. That is one of the scariest triple tops I've seen. And they say that there's no such thing as a triple top. We'll show them this gold chart right now with a triple top at 2100 and a pullback to 1850 right now. But I like Dale's position where it looks like 1800 is in the cards here. It's kind of one of those things where people pile into a little bit heavier during inflationary scenarios. And, once they're in, there's, you have the story, the narrative of the central bank buyer versus the producer seller. And, what it looks like is maybe some of the central bank buyers got filled and the producers keep selling. And so, it's been a while where gold has been outperforming real rates tremendously, where gold could have pulled back a long time ago. So maybe this is just gold's, pull back into line moment. Quite honestly, I thought that it was going to have a chance to break through that top, but we failed again. And now I don't even know what to say to be bullish. So,
okay. So how much? Go ahead, Dale.
All right. Well, March was a very important time frame, right? We had a low in the S&Ps at 3,800. We had the gold low at 1,800. We had dollar peaks, which a dollar is now surpassing. So I'm looking for a reset in all of these markets to revisit the March lows. I think the S&P will hold above it around 3,900 after the market makes a stand at 4,200 but fails. So I'm thinking that happens into the eclipse.
Okay, great. Now you mentioned the dollar, and is this gold issue more a function of dollar strength? And where do you expect the dollar? Because
Yes.
it was almost 2 years ago in, I think, SEPA 22, where gold was at what, 112.50 or something. Or no, sorry, the dollar was, DXY was at 112.50 or something like that.
Okay.
So do we see more dollar strength coming in the next month or so?
It's a little trickier now because we're getting to fibs. We've retraced that decline from 114 to 99.5. We're almost at the 50%. 61.8's about 109 in the ballpark. And if you want to get real bullish, well, then you drink milkshakes, right? If you want to be real bullish. But 78.6 about 111. I'm thinking around 109. And yeah, I think Tony could verify this. Gold can rally with the dollar going up, but it's very difficult to find an example where silver thrived without a bear market in the dollar. So if I'm correct, and this is a failing rally in the dollar up towards 109, then I think, that's going to be the sacrificial lamb to bring things back is the dollar and letting the dollar go. So that'll bring back everything, even in nominal terms, will bring back the market.
It's fascinating, Tony, because I have almost the exact same levels and setup as Dale mentioned, but for almost entirely different reasons. Because for me, it's I look at what the political atmosphere is doing, and then I make assessments talking to my individuals and saying, okay, well, 109, 110, which I've been calling for quite a long time, and the dollar was most likely our top. And 3,800 is probably where we're going to have to go back to reset to get another rally into the market, but for entirely different reasons, which is quite fascinating.
Well, I'm going to turn off that camera you have in my office, Albert. And anyway, you know what? That gives me more conviction about what I'm saying here. I really love confluence of that. I interview a lot of people, and I get it's almost like a confirmation from people who someone may be an Elliotician. Tony does pattern recognition. And when people from different disciplines are coming to the same conclusion, I think it's a higher probability outcome.
Yeah, and because the dollar from my point of view is like you start going into the 110, 115 area, things are going to break overseas.
Destruction.
Systemically destroy. And the Fed and the Treasury know this, and they're not stupid enough to keep it up at like 120 and have Europe melt down or have all of Asia melt down. They're just not going to do something like that.
Okay, so dollar at 109, 110,
Mhm.
right? Then it turns around. S&P at 3,200.
No,
You don't think
no,
it
I don't
goes
think
that far?
so. I don't think it'll go that far.
38. Did you say 38? Sorry.
3,800, I think.
Okay,
38, 39 is where they
Okay.
want to probably come back to and then reset and relaunch.
Okay. Does that sound about right, Dale?
Well, I'm looking for 3,900 to rally back to 4,250 or so. Because I mean, that's a pivot. You know, 42 is a big number. And I think there are tiers under 42. Also, when everyone looks for one number, I've noticed over the years, you can tell I've been trading for about 1,000 years. It either never gets to the number, doesn't achieve it, or the number doesn't matter and it melts through it. So actually, I think this is going to be more prolonged, and my longer term target is 3K S&Ps, taking out the October low by the first quarter of next year.
3K. Okay. Interesting. Tony Greer, what do you think about that?
I have a kind of an opposite view. I don't get too terminally bearish in the S&P. I think it's going up. You know, I mean, I understand that there's been a real 8% pullback from the highs here that could very well get steeper. I'm not calling like a bottom. Don't, quote me on that at all.
Right.
But it seems like, sell-offs are going to be managed. The market, the economy refuses to dump into a recession, which is why the stock market is going to be able to handle higher yields. Now, I do think that yields are going to work their way higher. I just don't think that it's going to necessarily break all of the bull markets that exist within the S&P. And I'm talking about like the AI bull market within technology, the home construction market. And I understand that we got some weak housing data and there's some struggles with mortgages and stuff like that. But people always adjust. And I just feel like I can't just decide that rates are going higher and then jump in and have a consensus view that the stock market's backing off. I just don't see it that way. I'm like, like you said before, like we mentioned, I look to trade bottoms, and I think that we're getting close to one here. Whether it's another 200 points from here, I don't know. It's going to depend on behavior and whether or not we get a real capitulation, which we haven't seen even close to, but I'm hoping for. And so if we get that, then I'll be putting some chips on the table for, a run substantially higher in the next 6 months back to the S&P highs. And then we'll see from there. So.
Heads up for a short break.
Are you using the potential of AI in your portfolio management strategies? With an impressive 94.7% forecast accuracy on average, you can confidently integrate AI into your approach with CI markets. Visualize the potential volatility of your portfolio over the next 12 months and gain insights into specific assets that might experience fluctuations. This empowers you to make informed decisions on when to buy, sell, or hold. CI Markets covers a wide range of over 1,600 assets, including stocks, commodities, forex, indices, and economic indicators. Imagine running limitless portfolio scenarios to optimize your gains. Curious about the outcome of removing or adding certain assets? Wondering how your portfolio might evolve in the next 3, 6, or 12 months? CI Markets equips you with answers to these crucial questions. Whether you seek a streamlined portfolio analysis, wish to explore diverse scenarios, or aspire to track your investments with precision, CI Markets is the ultimate tool for you. Ready to learn more? Visit us at completeintel.com/markets.
Thank you. And now back to the show.
Hold on.
That's
Let's stop before we get too far into that. Let's move to you give a perfect segue to our next topic of tradable bottoms. So you and Tracy Schuchart, who's a regular guest, of course, had a really interesting exchange about VIX and SPY, saying we haven't hit a tradable bottom yet. So can you talk us through what you look for in a tradable bottom?
Yeah, I always I literally have an account in my trading account that sits in cash until the VIX trades 30. right?
Okay.
And that's kind of one of the basic ideas is, you know, just when there's blood in the streets and total panic happening, that's when you have to keep your head and be able to put money into the markets. And ideally, you know, you get there on a sort of slow burn up towards, say, call it 30 or 30 something. And then all of a sudden, you know, you walk in on a Monday morning, there's bad news out. The S&P is dangling at a new low. The VIX is bid a new high, and everybody's like, "Oh my God, what is about to happen?" That's an inhale risk moment for me every time.
Right.
Right.
32 is the March low too, Tony. I
Yeah,
mean,
it
the
could
March
be.
high in VIX was 31, 32.
Yeah, exactly. I knew you were talking about. I think that's like where you want to see some kind of, you know, reach in volatility, or which would coincide with a spill in stocks. Now that the S&P is back down here, the 200-day moving average, I get less and less bearish, and I kind of, you know, called for a little bit of a move lower. You know, this is something that's totally manageable to me. But you need one more thing. You need like to see the real panic in the VIX. You need to see huge tick index prints on the downside that show that everybody's hitting bids, consecutive red days in a row. I mean, you know, you want to see the fear and greed tip to extreme fear. You know, that's the stuff that gives you confidence to buy, and very little else. And that's why I'm not sure that what we just saw over the last several days was a tradable bottom in the S&P. There was just no heave. So that's my point.
Okay, so you're looking at VIX at 30. So just for the people who don't really understand the technical aspects of the VIX is telling you the expectations for the S&P 500 over the next 30 days, right? The next option, right? And so what it's telling you is there's so much capitulation in the market over the next 30 days that it's time to get in. The VIX doesn't necessarily reflect the market today. It's the expectations over the next option roll, right? So,
but the VIX expands when there's buying in volatility, which is people trying to hedge the downside of their portfolio. Right. And once the last guy comes in to hedge the downside, that's when, you know, the move lower is over.
Right. And so that's why some people think the VIX reflects the market right now, and it's not that. And the reason it's so important is because it looks over the next month. And so that next month is telling you why, you know, how broad the capitulation is, right? And so a tradable bottom for you is VIX at 30-ish.
Yeah, you know,
very
not,
simplistic terms.
It depends on the situation, but yeah, ideally something north of that where it's gapping to that level and the S&P is gapping to a new low. Like, you know, I'm a big fan of trading red to green days, right? When you see a potential reversal day, that's always a potential trade for me, depending on the setup. And when it's a big picture S&P setup that includes, you know, a reach for volatility, all those negative days in the row, maybe the biggest negative day that gaps open lower, you know, that's going to be everybody out by the opening. And a lot of times that's when the last of the selling is done and the whole market can recover. I mean, we've seen that over and over. So,
okay. So Dale and Albert have made clear that they think S&P is headed to 38. You don't necessarily think so right now.
No.
No. Okay. So when do you expect that we'll hit a tradable bottom? Like, do you have a general idea? Not that you're saying, hey, it's going to be November, you know, 32nd or whatever. Like, you don't have an expectation of the timeline. You just know what the signals are.
Yeah, and I'm looking for one now, you know, and we tried to, you know, we came close to putting one in on Wednesday when the S&P traded down below the 200-day moving average and came back and closed, I think, unchanged on the day. You know, that was close, but would have been a lot better is if it opened below the 200-day moving average and then closed above the previous day's high, up 3 or 4%, right? That's a signal where it's like, oh, okay, put my money on the table and my risk, my stop loss below the recent low, and make them come and get me, you know, because that's a high probability bounce of a situation.
Okay. But just to be clear, you're not looking for the S&P to go down to 3,800 before you're looking for a tradable bottom.
No, I don't think it goes that. I do see it dipping. I don't see it dipping that steeply. No, I'm a guy I think it stays above 4K. Maybe it trades 4,200. Maybe it breaks that briefly. We are within, in my opinion, you know, 100 or 2 points of a tradable bottom. And I'm kind of looking for that panic to come alongside it. I haven't seen it yet. So we'll see what happens.
Okay. That's very interesting. Dale, did you
Could I ask Tony something?
Absolutely. Yes,
Uh,
please.
All right, Tony. So you pay attention to the VIX. People have made a fortune being short volatility. Even
Mhm.
during the bear market, people made more money selling vol than owning vol when we peaked at the end of 21. Don't you think that their day is coming from picking up quarters off the sidewalk, that they don't see a steamroller coming that's going to exacerbate the move in VIX?
No, because usually if there's a real panic and a real, like a lockdown type of sell-off, I'm not taking my eyes off the tape for when the Federal Reserve is going to come to the rescue like a
The
white knight
bazookas, the bazookas.
with either, pick your choice of what their bazooka might be, whether they flood the markets with liquidity, whether they start talking about dropping checks, helicopter money, whatever it is. The Fed is that's where they're at some point the Fed put is real. So no, I don't think really that selling volatility gets old. I think the market positioning gets way too lopsided at the wrong time, and sometimes heavier than you think. And the reality is that there's still so much cash on the sidelines. I mean, everybody that I talk to is in some way, shape, or form involved in enjoying 5% yield in the 2-year note, whether they're a fund manager, a family office, wealth managers. That's what these guys are parking cash in right now. So, God forbid we get a steep enough dip, that money's going to come into the stock market at some point because it's going to be a better option. So that's why I don't get fatalistic about a curl over crash. I think the S&P is fairly well, put together to withstand that. The system is put together to withstand that. And I see a lot of reasons to be bullish. So
Great. Great. Very interesting. Okay. Speaking of helicopters and bazookas, let's start talking about the government shutdown. So,
Heads up for a short break.
In the fast-paced world of investments, staying informed is the key to success. Introducing CI Markets Free, your source for AI-powered forecasts. With our free version, you get access to powerful tools that help you make informed decisions. Join a community of savvy investors. Analyze market trends. Plan your investments strategically. Stay ahead with monthly forecasts, compare assets effortlessly, and download data for your analysis. Don't just take our word for it. Our users love the valuable insights CI Markets provides. Get started today with CI Markets Free. No credit card required. CI Markets, your source for AI-powered forecasts.
Thank you. And now back to the show.
Albert, give us the inside story. So, we have had panic media about government shutdown for the past 2 weeks. And there's talk of, something happening over the weekend or whatever to, rescue it. First of all, is it possible to avert a government shutdown?
Unlikely.
Okay.
It's almost a 100% bet that we'll be shutting down over the weekend. The Senate has a continuing resolution going for funding, but I think it has like 70 votes. But the House Republicans are simply not going to accept even looking at it, or even talking about it. There's complexities within the House GOP of, Gates wants to be leader versus McCarthy and so on and so forth. So there's a little bit of jostling of positions there, but we're definitely going to be shutting down.
Okay, so can we, for people outside of the US who think that we have a failed government system, who like to, say things about government shutdown, we didn't really have government shutdowns before about 1994, 96, right?
That's
And
about right.
then it became kind of a feature of the US system, right? It's almost a planned, political activity, really, to polarize the electorate. Is that fair to say?
Oh, absolutely. This is nothing more than weaponization of narratives for the opposition party versus the one that's in charge. Simple as that.
Right. And so this isn't necessarily a failure in government. It's just a victory of partisan politics. That's all it is.
That's exactly right. But the danger is here, and why I think that we're probably headed down, sub 4,000, is because of the way that the Fed and Treasury and the Biden White House like to talk to one another. They're going to pin the blame right on the Republicans for a shutdown, whether on the market dropping, and they control the 10-year bonds all the way up, and they can sit there and manipulate the market to come down on a sell-off. And then once a funding solution comes in, they'll relaunch this thing right back up to 42, 43, 44, 4,700. Who knows by the time the election comes around? This is nothing more for me than political optics of like, who's better for the economy? Is it us or is it them? And there's only one party right now that has their foot on the gas, and happens to be the Democrats in the Biden White House.
Okay, so Monday comes around, Auntie Janet comes out and says the sky is falling, and the government's not open. What happens?
I think there'll be a lot of risk off, just because of media narratives and algos starting to trade, but nothing more. I mean, it's not some kind of critical, everything shuts down and nothing in the government works anymore. People still go to work, the government still works, and they'll just get their checks 2-3 weeks later, but they'll still be working. Now the data, the Fed has this like cute little commentary saying, well, we're not going to be able to get the normal data that we rely on to make policy decisions, so we'll have to look at private data. From where? Larry Fink? Like, what are we talking? What are you guys talking about here? That's what's interesting to me. So, I think a little bit of risk off, and then, a little bit of hand wrangling and deals being cut, and back to the, bull market again.
Yeah. I mean, does the Fed even trust the preliminary prints of those data? I mean, nobody trusts that stuff, right? You look at it maybe directionally.
Yeah, but nobody cares. It's perception. It's perception is reality. Whatever the prints say is the reality for that moment. Nobody cares about the revisions, Tony. Those happen months later, and we can say, aha, we were right, but so what?
Yeah, exactly. So they're going to go to, B of A, CPI or something like that, or they're going to go to Larry Fink, something like that. Right, exactly. So what does that mean, though?
Just they'll be able to control the narrative, whatever they think. Whatever, if they say that the economy is great and that the unemployment is great, inflation has been defeated, and that's what those prints are going to show, and that's simple as that.
Okay, so this is, I guess, is this an opportunity for the Fed to say they're relying on private sector data, and the private sector data says that they've conquered inflation?
Yeah, I would absolutely assume that that's going to happen.
Okay. And so then will they not produce the government data once the government's back up and running, or they'll just produce it late and nobody will care?
Yeah, they'll produce it late, and then November there won't be a rate hike, and then all of a sudden December, when inflation is still stuck around, another rate hike comes.
Okay, so that's what you think is going to happen with the Fed over the next couple of months. Okay.
Yep.
So
I think they're going to have a hard time convincing people that inflation has been beaten. Either by the people who pay $5 for a cup of coffee at Starbucks or anything else that they pay for, or someone who has to pay $1,500 to rent a room in a house to keep a roof over their head.
Right.
Yeah, that's everyone knows this at the moment. Even now, I mean, eggs and food is still elevated. It's still 20% more than what we were paying pre-COVID. It's just, this is nothing more than political optics in the media that's being talked about. Inflation is dead. It's back to 2% or 3%. It's only slowed down. It hasn't gone down at all in 2 years.
So just to kind of give you guys just a kind of Texas view of inflation, to rent a plot for a mobile home in rural Texas is $1,500 a month. Okay?
Oh my God.
I mean, this is a mobile home plot. This isn't anything else, right? You supply the mobile home. It's $1,500 a month in rural Texas. So it's that expensive to find a place to plunk down your mobile home, right? So everyone is feeling it. And so Albert, I think we talked a few weeks ago, and I asked you, do you think the Fed will really push toward outright deflation to kind of normalize people's price expectations? Do you think that it'll come to that?
No.
Okay.
No, because
so we're at a pricing level. It's going to stay at that pricing level.
Yeah, because it's giving tailwinds to earnings for companies and boosting the market. Why would they get rid of it? It's all they have.
Okay.
But I do think that the shutdown is probably somewhere close to a temporary bottom that Tony wants to trade. I think it absolutely is. Whether it's 4,000, I don't know. I'm thinking 3,800 because of just optics. I don't know. I mean, don't quote me on numbers, but I
You
think
just
that
did.
I just think that these next 2 to 3 weeks is most likely going to be like some sort of a bottom for a while.
Okay, so the government shuts down. We come back Monday. There's no government. Half the country is celebrating that there's no functional government. Half the
Right.
country is upset about it. So how long does it last? Like, does everybody panic next week and they rush? And then, I don't know, Matt Gaetz or somebody is portrayed as the bad guy. And
That's always the case.
right.
I mean, everyone always panic. Everyone panics in the beginning, but I think they panic and then settle down unless it goes 2-3 weeks, which I think it'll go 2 weeks at least.
You think it'll go 2 weeks? Okay.
Yeah, I think so.
We'll go until mid-October at least. Do you think?
Mhm.
Okay. And then, so what's the downside of that? We start getting stories about how our military doesn't function and how, people can't get their social security checks and all that stuff. So within a week, we're going to get that stuff. But
Of course.
what's the real impact on the government over 2 weeks? Is there any major impact?
Not really.
Okay.
Not really. I mean, like I said, they'll come out with some kind of weird headlines saying the earth, the sky is falling, but no
Okay.
real impact.
The
Okay.
impact is for people who look at their drawdowns on their IRAs and everything else. And at 3,900, they're going to be calling their congressman and say, get this over with.
Okay.
You're ruining my retirement.
Okay. Does this also provide an opportunity for a dollar depreciation?
Afterwards, yeah, I would assume so.
Okay. So people have less confidence in the Fed,
course.
the US government, dollar falls below 100, DXY falls below 100, something like that.
Oh, I don't know about under 100.
Okay.
I
So
don't
tell me
know
about that.
about 100. I think, I think we definitely go back close to like 101, 102, but I don't
Okay.
think we're going sub 100. I mean, the rest of the world is even worse shape than we are.
Okay. So by end of October, we could have Dixie at just over 100.
Yeah, I can easily
Okay.
see that.
Tony Greer, what do you think about that?
About what?
Dollar. You think we're near dollar highs? You think by the end of October we have a Dixie that's 101, 102, something like that?
Man, it's hard for me to prognosticate. I had been bearish, right? The dollar, I had went literally neutral when it went into the moving averages, and then kind of said it looks like it can run. I have no idea, how far, but we're kind of still in the middle of that run, and I really just use the dollar as a speedometer for the risk that I have on Tone. It's not like I'm going to place any bets on it.
Right.
So the way I see it is, it still looks like there's a need for dollars, and it still looks like if U.S. rates are going to go higher, that money is going to flow this way. So that just is a kind of tailwind that I see continuing. So I can't really pick where the high is going to be. I'm not an expert.
Okay, right. And where else is it going to go at this
Yeah,
point?
and Tony, remember, I've always said that the dollar's just range bound here. It's just stuck in like 100 to 110 range, and it is what it is.
Yep. Okay. Now, Albert, since we're here, I do want to ask you a little bit about crude markets as well, because there's been some noise over the past couple of days about the Saudis and other people putting more supply on the markets, that sort of thing. How possible or likely is that, and how much of an impact would that have on, say, retail U.S. gasoline prices, that sort of thing?
Well, retail gasoline prices need to come down. It's a political problem at the moment. So, and I, from what I hear from my people, is the Saudi storage tanks are full. So yeah, they probably will be dumping oil into the markets relatively soon. And I don't even know if the Saudis really want, oil over $100. It creates problems for them anyways.
Yep. Great.
Yeah,
Dan, what do you think about that? What do you see happening with crude prices and gasoline prices?
Are you asking me, Tony?
Yes, sir.
I'm looking at potentially one more high. I have what's called a 3-drive formation.
Okay.
I just want to get back to the dollar for a second.
Yes.
For your viewers, take out your weekly chart of the dollar. And they say FX is one of the best technical trending markets. For 12 weeks in a row, we've had green in the dollar. I challenge people to find 12 weeks in a row red or green anywhere else. So definition of a trend is what just happened in the dollar. Okay, as far as crude is concerned, find me a bear. I guess Albert, there are no crude bears out there.
Right.
No,
So I think it's really crowded. the long side of crude.
I don't like these extremes, right? Where people say, oh, $200 oil or
Right.
oil $60. I don't like these
Yeah,
extremes.
people
right?
are talking super spikes again.
Yeah, of course.
Yeah.
You know what happened last time they talked super spikes?
Yeah,
Went
sure.
right down to $65 from 130.
From
And I
war.
don't like this. And I know for a fact that the Fed and even Tony Greer, we talked about this previously. I know that the Fed will act. I know that they use futures options to crush oil for political reasons, and rightly so. For the U.S. consumer. So I don't see a super spike happening, and I see probably us going back down to drifting back down to the high 70s, which I would love to get long in the mid 70s of oil. I'd love to.
Okay, great. So do you think by the end of the year we could be in the mid 70s?
I don't know by the end of the year, but possible. I mean,
Okay.
we shot up $20 in a month, so who knows?
Right. Yeah. Tony Greer
No
says
chance. No chance. There's no oil. There's no oil. There's been no investment in the sector. Saudi Arabia and Russia have taken a ton of oil off the markets. There's now Cushing is getting drained down to dangerously low levels. The SPR is not at a level where they can sell much more. That was the seller. Like, Albert, I think you had your chance to buy it in the 70s. I feel like that was it. We spent 6 months in that range while it was Joe Biden's SPR versus, OPEC saying they're going to cut. And then we got the output cuts. We got them to say, we're going to cut, whatever's necessary. There's no Biden SPR for sale at all. And now there's no oil in Cushing, and I feel like that's a really, really toxic cocktail for upside. I mean, I think we're going to break above, once we get above 93, then I think the range will be like 95, 105 for a little while. Also that everybody's betting on a recession happening. And that is also in their mind necessarily bearish crude oil. And I would point them to probably 80% of the last recessions that we lived through where gasoline demand is indented. So that's where I see that we have a consistent sort of politically structural energy inflation here in our country. And I think that prices are going to work their way higher.
Interesting. Okay. That's great, Tony. So even with the whispers about Saudi putting more supply on the market, you still see things going higher.
Yeah. Yeah, I don't think that they're going to put enough on the market to tip this rally over. I mean, this is a beautiful technical rally that we're in the middle of now. It could break down for all different kinds of reasons. And then I'm going to ask you, where are we going to get the oil from? Who's filling up Cushing? How's that going to happen? I need to know.
Well, if you listened last week, it's definitely not Venezuela.
Right.
So.
Good point. But that's what the bulls have to, that's what the bears have to answer to is, we've got oil, gasoline, and diesel all floating down to the bottom or below their 5-year average inventory levels.
Yeah.
So where's it coming from? Unless there's another lockdown, I have no idea.
Right. Ooh, that's scary.
Government shutdown, lockdown, lock everybody in their homes.
Climate emergency lockdowns.
Yeah, I hope not. Guys, thank you so much. This has been really amazing. We've gone everywhere from astronomy to crude markets, and it's been fantastic. So Dale, thanks for joining us. This was really fantastic. Tony, as always, we love it. And Albert, really appreciate you as always. So guys, thanks very much. Have a great weekend and have a great week ahead. Thank you.
Dale, wake us up that there's a Big Dipper pattern or something that we really need to know about, please.
I'll tweet it. I'll tweet it. And don't be pulling any moons.
Good point.
All right.
Take care, guys. Thanks very much, Tone.
Thank you.
Oh, yeah, thanks. Bye.
Bye.
That's it for this week's episode of The Week Ahead. Please don't forget to rate us and review on whatever platform you are watching or listening to this. Thank you.